The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman here. Wednesday, October the 13th. Dow's down 174 points at 34,202. Sell mode in the daily chart is rolling over into the sell signal. Maybe upgrade to sell mode by the end of the week in the weekly chart. Peak D in the monthly chart. Remember, peak D is where we always say, we've got to be a little careful here. So this is very important. Let's just go straight on. We're going to go through these different things because I want to go into more detail with all the questions that I've got here. Let's see how I can do with that. We've made a slightly lower low today in the S&P from yesterday, down 564 at 43.45. This is, look at all these little red candles in the last 4 days, even though it went right to Chapman Wave inside track repellent zone. Now, what does the inside track mean? It means that I try to take a couple of points of contact from lower highs or higher lows and treat that as if it's a trend line that's indicating to me, or to the viewer or anyone's looking, where there could be a turnaround on any bounce to the upside or any drop to the downside if it's a support level. And I always call it inside. One line would suffice, but over the years, not years, decades, I found that if I do it as an inside track, it's funny because you've got charts at all different price levels. The one we're looking at now is at 4,344. The one that we were using for the Dow is at 34,213 right now. It doesn't matter. It's the same principle. You've got a trend line, in this case from the Dow all-time high on the 16th of August, 35,631, and then all these lower highs, and they create a beautiful little mini channel. Now, it doesn't matter what the price is. I usually say, I know this is not a technical indicator, I don't know how you'd even program it, but it's about 3/16 or a 16th. I draw this little tiny channel, and it's incredible. Look at this, the way the Dow went right to it the other day. Within 3 days, it tried to test and break that green line. It couldn't do it. It went just above the pink line, the declining pink line, and boom, it comes down again. Look at the S&P. Boom. It goes right to the door at that hit, and it hits it exactly. And then it turns around and comes back down. So this is one of the techniques I'll be teaching. Let me just show you this right now. I always forget to do these things. This is on Tuesday, October the 19th, 4 o'clock to 5:30 p.m. Eastern Time. The hair color seems to have changed a little bit here. What to prepare for into year's end, and what sectors to focus on. Sign up now. This is going to be a webinar I do on Tuesday, this coming Tuesday, October the 19th, 4 o'clock for subscribers. It's only for subscribers. Why? Because it has to do with the positions we have, what we're doing. In fact, as I'm looking at the market right now, there's a chance that I'm about to come out of some of our latest positions, even though they're nice gains on it. I think I want to go back to building a cash position. This market is now looking to me that the whole chip set, you remember we spoke about this, I said chip shortage? What are we talking about? The SMHs are going to all-time highs. What chip shortage? Well, it was a chip shortage, and I remember months and months ago, I had asked Dave White, our technical guru here, that's our electronic technical guru here at TFNN, also has a fabulous show. This is David White. And what happened is I asked him, I said, David, what's with this chip shortage? Because everywhere I hear in the auto industry, and this was months and months ago, I said, they're talking about shortages of automobiles. They don't even, some dealerships don't even have 2022 cars in. Usually they have the 22 cars September, October of the previous year. They call it the next year's model number. There's nothing there. And he said because the auto industry is they're cheap. They weren't prepared to pay up to get the equipment, the chips that were needed. Basically, what I'm thinking here is that the chips that are needed are more sophisticated, because why would the fabs want to produce all the old stuff when it's the new stuff that's needed? And the auto industry didn't want to do anything about it. Therefore, they're lagging, they're behind, they have a big problem, and that's affecting them. But it's starting to now affect other areas. So I'm not liking what I see at all over the last couple of days. We do have another new position that we put on this morning. We split it in two because it looked like it was in a gap up, but I wanted it. I didn't want to miss it. I did take a chance, so we split it. We got the first part of it, and the day is young. All I can say is I'm not even prepared to mention, whether or not it's succeeding. The day's young. Anything that you talk about right now in this particular market will mean nothing at 3 o'clock this afternoon. You need to sustain whatever it is. If it's a rally or if it's a decline, if it's short, it needs to be sustained into that 3 o'clock period. So with that said, I'm doing a webinar, and this webinar is saying, what are we focusing on? What is the pattern? What are we expecting from Chapman Wave methodology, since we've got a leg B, possibly a peak B in the S&P in the Chapman Wave methodology? A buy mode almost always goes to a D, so there should still be higher highs to come in the S&P. How do we put this whole thing together with the chips? I remember Dave distinctly saying, oh, the auto companies are cheap. They're not prepared to pay up. Well, I think they're going to have to pay up at this point. In fact, they're going to have to do everything they can, because the lots are empty. I mean, I happen to have been to one just last week, and there were no cars. There were just no new cars, and the used cars that they got in as trade-ins, people are putting the names down. First of all, the new cars, one of the people said, you're paying almost as much as as a stock automobile that does not have all the accoutrements, all the fancy electronics, but for the second-hand car that you're buying, you could buy a brand new car. That's how expensive they become. So all I can say is this is something that we've got to take into account. It is here. It's to do with a combination of workers, lack of workers. I believe that within about a week, we should have unemployment numbers increasing, because there are so many people, percentage-wise, that are leaving their jobs or aren't going to be able to stay in their jobs, and will not get any kind of payment from all the years that they've put into the work. And this is a sad situation that's going on now. So market-wise, the volatility is something that we have to take in. And I'm going to be doing a webinar and talking about what sectors we are liking, what sectors we want to look at, what positions we want to start preparing for 2022, etc. I think it's a really important timing-wise and really important look at your portfolio and what you should probably be doing and what you can do too.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So the QQQs are up $1 at 358.21. Look, Apple. Funny enough, yesterday I just my wife had something that she had to do at Apple. I said, you know what, I'm going to come with. I want to see what's happening. I want to see how many people are there at the Apple store here in Chestnut Hill, Newton, Massachusetts. And went there, and it was fairly quiet, I must say. One of the more quiet times. What was it? Tuesday. Midday. All I can say is that I asked a couple of questions. I was really just listening to what was going on, but I asked a couple of questions about the product lineup, etc. And these are not salespeople. These are people that are really there to help you with whatever it is, transferring data to whatever. And I got the feeling that there was a certain complacency. Which in a way is good for your workers. You want them to be kind of complacent to a certain extent. You don't want them to be worrying about anything. But at the same time, I try to put together what I knew of the Apple chart, which was very weak on a daily basis, becoming very weak in a sell mode on a weekly basis. And the monthly chart is in a leg. I'm calling this a leg F. I could give it an alternate count. It's an F. Everything about it looks like an F. The MACD is just about to cross negative, but being strong. Stochastic's fabulous at 87%. On balance volume's just dipping a little bit. It's still very good. 9 period is way above the 14. So the monthly chart on Apple I would say at this particular point, there's tremendous support in the 120 area. 128 is the 14-period exponential moving average, but I would say the whole 120 area should be very good support on a big pullback. I love this. You see this chart you see on the monthly basis, you see 142 round number low, and that would correspond right here to trough A. That's right there. Then Apple split. It hadn't split for a long time. Then it split. So this is that 4 times? I can't remember now what it is. But Apple did split, and that's still the old trough A from way back with the rectangle formation. That's what I was drawing in right there, and that's pre-split. And this is up here, the 140 area, and now it's at 40, said 3 to 1. I don't remember. But Apple did split. And what's really important about this is that within the context of the tech sector, look, keep your eye on the left side chart, the middle chart, the weekly, on the right is the monthly. Now keep your eye on this XLK. See that chart? Weekly, daily, monthly has just gone to a sell mode. And weekly has just gone to a sell mode. I should put a down arrow right there. Although it's midweek, I shouldn't do that. But no matter what, it's been underneath 4 weeks in a row. It's traded underneath the 14-period moving average. And look at the monthly chart. The monthly chart's in G/C, barely turned down. The MACD is still good. The stochastic's very good at 92%. So I don't want to get too carried away. It's the shorter term that's the issue. And now I'm saying the shorter term more towards the weekly, which means that I'm stretching it into the intermediate term. If we look at the Dow, it's already 2 months in the consolidation. So I think this can go on a little while longer. And I suspect that it's really at this point, it's using more time than price. We're going to get into a phase in the next 2 weeks to say, hey, if you're going to start using price, then we might be looking at something very different in the monthly charts. Haven't got there yet. All right, let's get back to our story. The IWM, this is the Russell 2000, small caps, stuck in the middle of the range. Remember, a rectangle formation can last a lot longer than your patience. And here it is, right in the middle, between 234 and 208. We said 222. Now, there are a couple of things that I wanted to talk about. The TLT, this is the Lehman 20-year Treasury bond fund. I think they also have more than 20-year. They could even have 30-year, but it's called the 20-year Treasury bond fund. Strong leg A to the upside. I'm calling it a gray leg A because we haven't got anything to confirm that it has gone even to a buy signal at this particular point in the Chapman methodology. I'll be talking about this in my upcoming webinar, a 90-minute webinar coming up on Tuesday. Usually I try to make them as educational as possible, but in this case, I'm also going to add a lot of charts of stocks that are fantastic stocks. Where would we want to put in a buy for the next big move to the upside if there's going to be one? Wow, there are a lot of things that are saying right now, what are you thinking about bullishness? We haven't finished the bear side yet, but let's get back to the TLT. 145.17 up $1.23. Made a low at a trough C right here. I forgot to type that in at 141.45 on the 11th. Yeah, 141.45 on 10/11/21. So with that said, 4 points to the upside. That's a pretty big move, but look how sharply it's come down. But the most important thing, as I see it right now, is that, that shouldn't be white. That should be, change the color. It should be gray. There you go. What's really most important right now is that within the context of yields as they relate to the XLF, which is the financials, and this is often a kind of in the potpourri or the smorgasbord of, or the actual library of all the different things that pertain to a move in any direction, in anything. I like to look at this and say, if the yields are starting to go down and bonds are going higher, we've got to look at the XLF, S&P Select Financial Spider Fund. Not that it's the only thing, but it is a pretty important part of the financials, the yields. In this case, yields suddenly go down instead of going up. And you see we're at a peak C. I could call this an alternate count. I don't need to right now. At 37.97 in the XLF, the S&P Select Financial Spider Fund, down 53 cents. Not a big deal. Made a high at about 39.37 or something like that 3 days ago. Now it's trading at 37.98. All I can say is, within the context of the sideways move in the weekly chart and looking at the monthly, going quickly to a peak B, then one bar rest, and then a peak C, one bar rest, that's a month, and then a leg D, and now you're at a leg D. I'm going to watch this very, very closely. Our bank stock that we have has had a spectacular move, went from the 31s to the 44s. It's now at 42. I'm just watching this closely. Bank earnings come out this week. So it's kind of important. This is such an important moment, and it's why one of the major reasons why I want you to do the webinar now, in the sense that I want you to look at what, in fact, in this potpourri of all the different sectors, and I mean, look at crude oil. I'm going to add that right here. Look at crude oil pulling back a little bit, but still at recovery highs, not at the 85 level that it was at way back in 2018, before it plunged to $7.61. Yeah, it was in April, it was, and now it's back into the 80 area. These are big things. This is affecting the economy, and that's why I want to look at it in great detail. So just to get back to the TLT, if the TLT is able to travel from 145 to the 147s by Friday.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Dow's down 211. S&P's down 16. I better get to some of these questions right away. ARQQ, this is ARQUIT Quantum Inc., quantum encryption technology platform as a service making communications links secure against attacks. I was asked about it on the 8th. What's the day? The 13th. 5 days ago, 5 sessions ago, 5 days ago. And it was at 1675, and I typed in here, be patient. And here it is at 13.81. This sector is a sector you keep your eye on. There are a lot of IPOs, and they all have the same kind of pattern, big spike, and now they're taking a bit of a rest period. I think they'll be back, but the timing is really important. So just have patience. 12.09 is the 200-period exponential moving average, and it might have to hug there a little bit before it finally has the selling subsides, and it can have a pop to the upside. Pop to the upside is not what you want. I can tell you want a bigger move. I just don't see the bigger move right at the moment. It could happen in a couple of days, but today's action says just have a little more patience. All right, that was that's ARQQ. I was asked about the Bitcoin BTC. This is the Bitcoin futures continuous contract. I made a peak B. I really have to call this a peak B. I could call it an E/B, but everything about it is good. The MACD is good. Stochastic's flat at 91%, really good. And the on-balance volume did pull back after being overbought. I like this very much. We still have a very small long position in the Bitcoin. This is GBTC. In the Bitcoin fund investment trust. And that's also, I'm calling that a PB with a little mini pullback here. Coin, I was asked about, so could I look at coin? Yeah, coin's lagging. To tell you the truth, I don't know if coin is the one that's really going to move. Just in chart formations, I don't know much about any of these other than the chart patterns. Ethereum has a closer resemblance to coin, but in a little bit of just the way I'm analyzing, it is slightly stronger as a chart formation. That's all I'm talking about. So yes, so I do anticipate that Bitcoin itself, this is the futures, it's going to go to a leg C in the 58,100s. If it does that before it takes out 53,500, that's really important 9-period exponential moving average support. Maybe it goes sideways a little longer before it pops to the upside. Question, what did I have? Oh, OIH, question on the OIH. OIH did make, I'm calling this a peak F at this point in the Chapman methodology, only a leg C in the weekly chart, but this F says could be very much resembling some of the patterns we've seen with these sudden spikes to the upside. Very strong stair-step move where it pulls back and then powers up and then pulls back very sharply and then makes a higher high and a higher low, but these pullbacks are quite deep. So if OIH trading at 212.40 minus 3.62, if it closes in the next 3 to 4 sessions, in other words, by Monday, this coming Monday, if there's a close under 205.50, it's called 205. A close under 205 and it's trading at 212.60 right now, says, crude oil, at least for the moment, is done, but we are coming into the winter. So maybe it separates a little bit from, say, heating oil. Let me show you the heating oil. HO is the continuous contract chart. There it is. That has made higher highs. And I do believe that I'm calling this a GSAS-C in the weekly chart. And already everything about this says that the weekly chart should be a B. So what are we in for? We're in for inflation. We're in for higher oil prices. We're in for higher crude. We're in for a shortage of goods. We're in for containers holding back the delivery of goods. Let's see, what else are we? We've got layoffs. We've got workers that we need. Other than that, things are really good. So we've just got to keep that in mind. But the irony of the whole thing is that there are buyers in this market on every pullback because it's one of the places to be, and it's one of the places to be if you're looking at trying to have your portfolio beat inflation. You want to see your portfolio rise as well. That is your stock portfolio. Question, what does it say there? GDX, wow. GDX, let's see, we are long GD. Oh, wow. We are long for subscribers from opening call. We are long. Remember I said, if you're interested in my webinar, I said this when I announced it, was it yesterday or Monday, that I was having this webinar, that we're starting our positions right now. Some of them are working immediately, and some of them might take a little bit of time. I don't know. But we're looking at this market in a different light for the next few months. We have to look at it with an eye towards how rising prices are going to impact positively some stocks and negatively other areas. So that's the way it's going to be. So let's go back to questions that I had here. Where was it? Oh, Newmont Mining. You remember we kept being asked about Newmont Mining. I said nibble on it if it starts to show some strength. First time that Newmont Mining is breaking out of the channel. Remember, we've had a couple of callers, one in particular, who said, always like to have longer-term positions. What do I think of the longer term? And what I said is you just have to wait a little bit until it gets out of this container ship that it's been in pattern, and it's done that today. So NEM trading at 56.16. This is the first sign that the market, that's Newmont Mining, NEM, has recognized the MACD rising, the histogram rising, the stochastic going from under 20% to 57%. On balance volume is still lagging a little bit, but this is very, very good action. So now you've built a support in the 54s. You're looking at longer term positioning. So yes, you could add now another little, and we started small, you can add another position here if you are doing that. For subscribers to my opening call, I wanted the generic, and I wanted us to be in the GDX because it was starting to show such good signs of support and a turnaround for the very first time. It did the Chapman wave falling axe formation with the 1-to-1 to the downside, almost to the penny in the weekly chart. Found some support at the 28, I think it was 28.80s or whatever it is. I'll give you the exact price. 28.83. That was on the 29th of September. Here we go. 28.83, and it's 9.27.21. So this is good sign. It's not fantastic because that monthly chart is still a dreaded H pattern. Went under it. It's trying to get back in. But the weekly, daily and weekly are showing very nice signs of at least a decent move to the upside. GDXJ. Yeah, GDXJ is the juniors. J, I have not done anything with this. Is at 43.17, A, B, C. Possibly even a little bit stronger daily chart pattern. And the weekly chart, yeah, I'd say even the weekly, yeah, the juniors are starting to move. That's a really good sign. Up 142 at 43.12. Basil Chapman, Tiger Technicians Hour. Don't forget my webinar coming up this Tuesday, 4 o'clock for subscribers. Become a subscriber. Go to the front page of the TFNN.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks, we're back, and I'm just looking to see. Oh, there it is. Very good. Okay, good. So I wanted to show you the GDXJ, which is the gold miners. What is the actual title? It's called the Van Eck Vectors Junior Gold Miners. So here's the weekly chart. In the chart wave methodology, we're always looking at for the fourth highest peak. We alphabetized them sequentially: A, B, C, D, E, F, G. There's never an H. And it's at that fourth highest peak D, that other things can happen. I look for doji candles, turnarounds. I look for a lot of things for the shorter time frame to give us a clue. And look what happened. You went from the low that was made back in 2020, March, the week of the 13th, and the week of the 20th. Remember, the 23rd was the day of the low, of the market low. This is a precursor, actually, and it shows you right here at 19.52, the week of the 13th of March 2020. It starts a buy signal. You see the on-balance volume gave just a beautiful reversal. About a week later, the stochastic started to turn from the 20% area up, and the MACD took its time as usual. It's a lagging indicator. It took its time to turn up, and then eventually the line went over the 14-period moving average. The monthly went peak A, peak B, peak C. Doji candle takes its time. On the week of the 22nd of May of 2020 at 50.37, it takes 4 weeks, touches the 14-period moving average, and then boom, closes above the 9, and then boom, starts an acceleration up to another long-legged doji candle, and that's the high that was made at 65.95. And that was the week of the 7th of August. And then what does it do? It starts coming down. Trough A, trough B. On the way down, we call them troughs. Trough C, trough D. It has a nice rally peak A, B minus. It goes into that resistance, the inside track resistance area, comes back down, lower low. And what does it do? It goes to an E and an F. And then it rallies again. It goes to peak A. It goes finally above the inside track repellent zone. It goes to a B, and then right at about 55, it turns around and forms another. All of these are dreaded H pattern. The lowercase h making the lower left side low, takes it out. Here it does it again, and all of a sudden we've got trough A, trough B, but it's also an alternate count E, B, C. This is either a C with an alternate count goes D, E. Finally, you get this doji candle right here, beginning of October. That was the first week. Yep, the week of the 1st of October. Low of 37.31, and it rallies. And where's it right now? It is testing and just breaking for the first time above the 14-period moving average since it broke down back in June, the week of June the 18th, in the 53 area. And here it is at 43, 10 points lower. So I just wanted to show you, here's this, how I do the inside track, and I'll be showing more of this in my webinar coming up on Tuesday night. And you'll even hear there's a little mini one going to the upside. Look at this. Look at that, and look at that. Right? So I love these patterns, and you can learn how to use them. And all of a sudden makes an arch formation, inverted V or an arch formation, takes out the left side low and it goes lower. Now what has to happen to reverse the process, the MACD on a weekly basis is close to turning positive, but it hasn't yet. It's a weekly. We have to wait for Friday. Stochastic has finally gone from the single digits to 18%. You need to see the stochastic quickly go above 22%. In the 20s is really what you want to see after a very quick turnaround. And you want to see the 9-period moving average, which is pink, in about a week or two, because it's so strong. The gold and gold stock, junior stocks are moving up. You want to see that finally cross positive. It can cross positive for just a moment, but most importantly, when the stochastic only goes above 80% very briefly and then goes back under it, that is almost always a failure pattern. You got to be really careful. You want to see almost the exact opposite in this particular instance. You want to see the stochastic power much higher at this stage and keep moving higher. So I just wanted to show you on a purely technical basis, because the questions, a number of questions, as I was talking about the goals, questions came in about the gold, and I wanted to show you. So the GDX leg C, it'll be very positive if it's able to close above the stalling at the 90-period moving average back in 3rd of September, where it was at 44.39. Let me just show you something here, because the day is young. Anything can happen. I mean, we had a position. I like to talk about what works. I also like to talk about what doesn't work. We took a chance this morning. We took 2 small positions in a particular stock. It's a stock I still like. It's going to be the timing. And it had a spectacular pre-market move. That makes me really nervous, way below the entry points that I wanted. And then it reversed down. And unfortunately, there's nothing I can do. On the way down, we got into the one, and then we got into the other. And then we got stopped out. It could still turn around and have a wonderful close today. I'm not interested. We're out of it. We've had some gains, and we've taken some of those gains, and we've used up some of that profit today with that loss that we're taking. I'm not interested. I want to keep as much cash as possible. If it doesn't work out, we are done, and we are sitting tight. That's the way I want to look at this particular market right now. It gives you opportunities. You can take them, but if that opportunity turns into a disadvantage or a mistake, immediately take the money that you've got left and just say, thank goodness I got out now, because it's even lower than the stops that we had. I'm pleased that we got out. I'm not pleased that it happened at all. It was a chance because it's in the area I like, but obviously today is being impacted by the selling in that particular sector. All right, so now I have to go back to, so silver, I haven't even done silver yet. SI, silver is trading at, it hasn't broken out. It's not as strong. It could land up being stronger, in fact, on a daily basis. They rotate once they move in a particular direction, but it is good at up 70 cents at 23.22. Pass was one that was asked of me. Could I look at it? PASS. So this is almost like silver. It's the same chart pattern. It made the peak D top way back in September, just about 27, plops down to the 22s, and it's gone leg A, and it's in leg B right now, 25.14. But the weekly chart says, wow, there's a lot of work to be done for this to turn into a big bullish intermediate, not just a short-term bounce, but a more 6 to 8 week rally that can go even longer. And it hasn't done that yet. This is just the first week of a rally. So let's not get too carried away. But this is good action. That monthly chart is lousy. And so is the weekly, actually. But this is a nice turnaround. We'll see what happens. I just have to tell you, over a 3-day session, you want to see 25.50 hit and a close above 25.20. To me, that would say, now there's some stabilization, there's some support, we're filling the gap, and that gap has a resistance level of 25.42. That's the low of the 14th of September. 25.42, we got another 25 cents to go before we can get above that. Oh, another break. These are just flying by. Questions? Yes. Okay. I want you to just real quickly, Jets, someone said, can you look at the aerospace? Yep. So the US Global Jets ETF down sharply after that PT. That was a warning. Chapman PTs, got to be careful in the 25s.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman here. So Jets, that's the U.S. Airline sector. But if you look at the IYT, the IYT is pulling back from that resistance level. It was support, now it's back to being resistance. And look at the 9-period moving average and 14-period moving averages right here in the weekly chart. This is what we've been talking about for some time, is that the fact that IYT, the iShares Transportation Index, that the fact that it's been going down is not a great sign. It's not, I mean, when you use Dow theory, yeah, it's terrible, but actually, the transports now, it's rails, it's all, it's airlines, it's trucking, it's all sorts of things. But I am a little concerned because it hasn't shown any sustainable bounce, and that just says to me, whoa, we must treat that as an economic barometer. All right, just real quickly, let's look at this. Let's go to the Dow. I want to do, question came in. Yeah, that has to do with the Dow. So the Dow is making the second arch in the lowercase h that goes to lowercase m formation. That says that going to Friday's close, and today's only Wednesday, so not even half of the day yet. So this is early in the session. But if there is a move down below, a close below 34,000, be careful because it could be a full arch formation taking that to 33,785 low of a week and a half ago. What needs to happen is just to keep the sideways action going, and for some reason to see another pop to the upside, this time holding above 34,450, and here we are at 34,205. That's a big ask. So we're looking at this with lower lows and lower highs in the daily, and then a sideways pattern. But in the S&P, what we're looking at is a slightly different version because it made a lower low on that low at 42.78 back in October, at the beginning of October, and it's making lower highs as well. So overall, keep in mind, this is a very tricky period. Don't want to be overly exposed. Build up a cash position. And check out my webinar coming up. Great programming coming up. Pesavento and the